Hi guys, and welcome back to the Conscious Day Trader. My name is Yanis and I'm a funded trader on the Fivers for 250,000 account with multiple payouts. I'm also funded on Darwin X, 55,000, and also instant funding with more than 20,000 with multiple payouts. Now, I just wanted today to break down another educational video, and we're going to talk about round numbers. Everyone talks about round numbers. They're like 126 and 127. Why does price react to these round numbers, and should we pay attention to those? Now, if you do like everything that I do, ICT concepts, live trading every Monday, Tuesday, Thursday and Friday. Wednesday, I have my private group that we do Zoom calls. Make sure you like and subscribe, and I'll let you know how you can get involved with our community, but also how you can get some cool content when it comes out. Be the first one there. So without further ado, let's jump onto the video, and we're going to learn everything about round numbers. So what do we mean when we say big round numbers? Let's take, for instance, the pound dollar. One of my favorite assets to trade. I trade it every day. Like we said, Monday, Tuesday, Thursday, and Friday. Make sure you like and subscribe. If we're talking about the big round numbers, and let's take the pound dollar, at this moment of time, we're trading between the 126, 128, 127. What does that mean? That the pound dollar is reacting at these big numbers, and it's consolidating around these big areas. There hasn't been interest to trade above it or below the 126 or above the 128. It has been consolidating between these two numbers. And why is that? First of all, we have to see why psychologically are people willing to sell at 128 and buy at 126? Why do they deem that 128 is a premium price and 126 is a discounted price? It doesn't make any sense. It's just a round number. Is it though? Let's think about it psychologically. When we're starting to approach to these numbers, people are going to be thinking that orders are going to be filled. And when orders are filled institutionally, because we know that institutions trade big numbers, I want to be involved on the other side of what they've been doing. If they want to be selling at premium or buying at discount, I want to be doing the opposite, because then the price will be reacting to that. And it becomes a little bit of a self-fulfilling prophecy. Because everyone talks about the 127 as a target point, then everyone will be doing the same thing. And because everyone is doing the same thing, then the market moves in the same way. So a little bit about like how we react about Fibonacci numbers. Just because everyone looks at the same Fibonacci numbers, the price reacts to those Fibonacci levels, the self-fulfilling prophecy. The second big area that we're going to talk about when it comes to round numbers is the liquidity and order clusters. As we are getting into a big number, because of all the psychological impacts that we talked about and the institutional trading, we have a big influx of volume of trades wanting to be filled around these areas. So what does that mean? Liquidity is going to be increased. The volatility is going to be increased due to the accumulation of orders. And when these orders get filled, obviously going to be a reaction, and the reaction is going to lead to more reaction, and that's when we have the reaction to big numbers. It also acts as support and resistance. Support and resistance is something that we talk about technical analysis. A lot of people will apply these levels as support and resistance. That's also another factor that people will be reacting to these numbers. And finally, we're going to be talking about why do institutional traders want to trade at these numbers. Imagine if you have to deal with 1,000 contracts. Are you going to pick up the phone and call the bank and say,
I want to trade this at 1, 2, 7, 3, 4, 5, 6, 7.
Unless it's algorithmic trading, it's very unlikely, even if it's algorithmic, they would want to be a percentage away from a big number price. And that might be, let's say, the 127. But because of the orders and the accumulation of a lot of orders, they give a spread around the big number. What does that mean? That I want to be selling at 127, but I'm happy to take
0.5% down or up if I can't get filled at 127.
And that now creates a little bit of a range around the big numbers that people's orders are going to be filled. Obviously, we've seen a lot of reasons why these prices can be reacting around the chart. It's all right in theory, but what does it look like on the chart? Let's go and have a look on my favorite asset, which is the pound dollar. Okay, so here we are on my favorite asset, which is the pound dollar. If you want to look at the same data that I'm looking at, just go on TradingView, find Forex, pound USD, and look at Wanda. Drag that into the chart. And what we're going to do is going to go onto the monthly. As you can see, you can start this analysis of round numbers from all the way from historical data to the top of, let's say, 2.1 and go all the way to the lows of 1.0. Does it make sense though? Not really, because it would be a waste of time, because the price is trading so far away where we are now that we're not going to get there anytime soon. So if you're anything like me and you day trade, then you want to be as close as possible to the price action that is currently happening. And normally that will be a couple of months or maybe a year. But we can see this range here that the price has been doing. So anything around a day trade, we'll be looking at this swing high and this swing low. The swing high is actually 1.31 and the swing low is 1.202. So what we can do is start looking at the big round numbers. Now, to save some time, I've done this in the background. So all I've done is gone and taken a round number of the bottom side, which is 1.2. And we can see that if we go to the daily, we've got the 1.2 at the bottom there. And then I build the round number upwards all the way to the highest number of 1.3. And now we have this amazing levels, which is super clear. We can see here 1.3, 1.9, 1.29, 1.28, all the way down to 1.2. And you might be saying, okay, I can see that on the weekly. That doesn't make any sense. How can I make any sense of this? And how am I going to trade it? So if we jump straight onto the daily, suddenly we have an amazing roadmap just from round numbers of what price action has been doing. And we can see around 121 is the first time that we had a reaction to price. It pushed all the way up and came and found support again at 121 for all the reasons that we talked about before. Now, how can I trade this? A lot of the times, these ranges, look at this, to the pip on the upside and on the downside, 1, 2, 3, 4, 5 times. And a lot of the times you will see as soon as it breaks the level, it's highly likely that it's going to go to another range of that level. Now, I don't want you to be extremely picky with this and say, I'm only going to trade it around 121 exactly, because a lot of the times it creates a range around a round number. And that's because of the order clustering that we talked about. So if I want to trade as close as possible at 121, but I don't have the order of 121, a lot of people will be happy to be filled around 121, 100. A bit like us, when we sometimes see a move and we're like, I want to take this trade. It's not exactly my price, but I'm willing to take it. The same happens at institutional level. They give maybe 0.5% to 1% or maybe less of what the price is, and then they will get filled. And as their orders get filled, then the price will move to a better price, and then we'll slowly get closer and closer to what? That round number that is discussed about. So as you can see, we had that reaction. So think of a round number a little bit like a range to the upside and a range to the bottom side. And sometimes that ranges between 20 to 50 pips. And if you're happy to wait to get that round number, the better price you're going to be getting. How can I use this in terms of a system, an easy system to go there? Because I know a lot of people are quite beginners in trading. What you can do for buyers is look at the daily range. You can see if it breaks above a round number and it has a positive close, then we can trade it to the up round number. Now, sometimes, obviously, and depends how you're going to work with your stops and your lot sizes, but you might get wicks like this, where it's broken and closed above, and then the next candle came down all the way down here. And then you can put a little cool rule where you can say, if it's below the 50%, you can take the measuring stick from one level to the other, and you can find the 50%. Now, you can see that that candle never came and reached the 50%. So you can apply your stops below the 50% of the round number. So you could be applying a trade that will have a stop there. Now, how many pips is that far away from where you entered? If you entered there, we're talking about a 50 pip stop. So obviously, you're getting a 50 pip stop. The next price range that you want to be taking is 100. So that's 2 for 1. How many times has that done? You can go back and test this. And there's a simple system that you don't need to be. The great thing about these round numbers is you don't have to be subjective about where you put your lines. It just tells you, and you can just apply it on exactly the round number. So as we can see, we've got a little bit of a roadmap on how we can trade this. Breaks the highs, closes, then we can trade to the next line. Maybe that was too close. It's not a lot of pips, but it fails, breaks below, and then we trade it downwards. That way, the same way we see the 50%, we can trade it all the way down as the same way we're trading it upwards, and it keeps it simple. And we can see that happening over and over again when we've got levels like the 125 where it went to the pip twice and then it pushed back up, and the same thing that happens to the 126 once there, consolidates around the 126, finds the 127, back to 126, and now it's potentially attempting repricing at 128. So you can see the power of round numbers. All the reasons that we talked about before are the reasons that the price reacts really well to these big numbers. So I hope that was useful. That was the tip of the week, as we normally do every Wednesday. But if you want to see me live trade every Monday, Tuesday, Thursday, and Friday, make sure you like and subscribe. Until next time, have a good one.
Run it, I can't take no loss. I don't even know what it costs.